I've combined the accounting knowledge of my entire team of accountants, I've cut all the filler and the jargon, and I've turned it into this video. It's the condensed result of over 40 plus years of accounting experience, so that you, whether you're a small business owner, you're self-employed, or thinking about starting your own business, can manage your finances confidently and effectively. But first, let's start with the big question. Why is accounting so important? Well, accounting isn't just about keeping track of numbers, it's the foundation of your business's success. And let's face it, it's probably why you started a business in the first place, to be successful and increase your finances. Think of accounting as the GPS for your business. Without it, you're basically driving blindfolded and hoping that you'll get there in the end. So first of all, let's break down some key accounting terms you'll most likely have heard of before and will definitely come across regularly in your business. So first we have revenue, that's your income. Turnover, that's still your income. Expenses, that's the money that you spend. Overheads, that's still just another way of saying the money that you spend. But overheads are also sometimes called indirect costs, which are expenses you have even if no income is coming into the business, like rent, telephone, utility bills, subscriptions, etc. Then we have direct costs, even more money that you spend. There's a bit of a pattern here, and specifically in your first 12 months of business. Unlike overheads, this is money usually spent on things directly relating to your revenue or income, such as buying stock, delivery costs, or paying subcontractors. And next on the list are two especially important ones. Gross profit, that's what's left after direct expenses, and there are often trade or industry averages for what this should be as a percentage of your revenue, and it can be useful to compare and see how you're doing. And second of these is net profit. This is the most important one of all, as it's your bottom line, and there's a very good Dragon's Den saying, turnover is vanity, net profit is sanity. Very true, as this is what you have left to live on essentially. I know clients who have revenue of $1 million plus, but net profits under 10,000. And other clients who have revenue of 60,000, but net profits of 40,000. It all depends on what your expenses are. And finally, don't forget about cash flow. It's what keeps your business running day to day and is the money in and out of your business daily. Next, we come on to choosing the right type of structure for your business. It's one of the most important decisions you'll make. Should you be a sole trader, a partnership, or even a limited company? Now, each has its own tax responsibilities and benefits as well. For example, as a sole trader, you are the business. It keeps things simple as you take money out as and when you want. However, you're personally liable for all debts. With a limited company, it's like you created a brand new person. That's the best way to think of it. It's a separate legal entity to yourself. It does offer some protection from business debts. However, it has its own totally separate reporting requirements, which are much more complex and numerous than a sole trader. For more information on specific business entity types, see our video on sole trader versus limited company. It covers this topic in much more detail and compares the two to help you decide which is best for your business. And by the way, if you're still with us, thank you so much. We're a small channel with big aspirations, and the time you spend with us is really, really appreciated. Now we come to the small stuff, small but mighty, as keeping good records is non-negotiable. You'll need to track your income, expenses, and bank statements. And in the UK, you're required to keep these records for at least 6 years for HMRC. Think of it kind of like holding on to your old school report cards. You'll probably never need them, but when you do, they'll save you a world of trouble, and you definitely don't want to hear from HMRC. Must try harder. By the way, if you're finding this video useful so far, I'd love it if you hit that subscribe button. And don't worry, if you get to the end of the video and you hated it, you can just unsubscribe. Easy. But back to keeping your records. And building on that is bookkeeping. Now, bookkeeping is the backbone of your accounting. It's all about tracking your daily financial transactions. Think of it kind of your business diary. Keep receipts, log expenses, and track your income regularly. Doing this consistently will save you a lot of stress at tax time, but even more importantly, it'll enable you to see where your business is at any given time, with revenue, expenses, and subsequently your net profit. Remember that Dragon's Den saying? That's your sanity. In addition, there's no need to do it all manually if you don't want to. There's software like Xero, QuickBooks, or Free Agent, for example, and these can automate much of your accounting. Just choose one that suits your business size and needs, and obviously pocket as well. Now, what about registering for VAT? In the UK, if your turnover exceeds £90,000 in any 12-month rolling period, you have to register. But even if you're below that, you might benefit from registering voluntarily. For example, if you have to buy lots of materials or stock on which you pay VAT, you might benefit from registering for VAT earlier, as you'd be able to claim all of that VAT back. Plus, there are different VAT schemes like the flat rate scheme, which can simplify your reporting. The important thing to remember is the quarterly filing deadlines. We have a great video specifically on whether you should or shouldn't VAT register. Have a watch if you're unsure. And that brings us neatly onto tax deadlines and staying on top of them. Now, tax deadlines can sneak up on you. Some of the key dates to remember include January the 31st for self-assessment for sole traders. And for limited companies, there are multiple deadlines, such as 9 months for Companies House, 9 months and 1 day for corporation tax. It's a bit like having a baby, just a tax baby, and often much more painful. For VAT, the deadlines are usually quarterly, but can be monthly or annual with other scheme options. And you know, missing a deadline is a bit like forgetting your wedding anniversary. The penalties can be painful and the stress is definitely not worth it. Next up is cash flow, which we touched on briefly earlier. Cash flow is king. Even profitable businesses can fail if they run out of cash. Track your ins and outs carefully using bookkeeping, which we already covered. And as we mentioned earlier, there are some useful tools, really useful tools, to forecast cash flow and to help you plan for any gaps in advance. And these can vary from bookkeeping software to simpler things like spreadsheets and even pen and paper if necessary. As long as you track what's in the bank now and what's due out, you can be prepared. Now, something else that comes up regularly is how to take money out of your business. Paying yourself can be tricky. For sole traders, it's actually called drawings. Essentially, you're drawing money, taking money from your profits, and you can take drawings whenever you want. Be aware though, you pay tax on your net profit, not your drawings. So for example, you could have net profit of 10,000. If you took out 8,000, you still pay tax on 10,000. For limited companies, you'll likely use a mix of salary as a director and dividends as a shareholder. But remember, keeping things tax efficient is key. Take a look at our director's salary guide video for more information on this. The most common tax deductions and allowances. Speaking of other videos, did you know you can claim tax relief on a wide range of business expenses? Some common deductions include things like travel costs, home office expenses, and even training courses. Just don't try to claim for your weekly takeaway. HMRC is not going to subsidise your Friday night curry. Take a look at our video on 30 allowable expenses for some solid tax saving tips. That brings us to the popular question of just when should you hire an accountant? Well, if you're struggling to keep up with compliance, or you need help with your tax planning, or maybe just want to focus on growing your business, then it's time to get professional support. Think of it kind of like calling a plumber. You could try fixing that leaky pipe yourself, but you'll probably end up making a bigger mess. And is it really worth your time and stress levels? Thanks for watching. If you did subscribe earlier, thank you so much. Feel free to share this with anyone who's starting their own business and needs some guidance on their accounting, particularly just starting to learn accounting basics. And if you have any questions, leave them in the comments. See you in the next video.